On. We're live. Hey, Kevin and Youssef, how is it going today?
It
Great,
is
great. How you doing,
awesome,
Chris?
awesome.
Yeah. So, Kevin, how was your weekend? What's going on
It,
in your world?
it was very interesting. This weekend, my little lady actually had her gymnastics meet, and she came in first place in three events, and came in second in one, and won overall, and got a trophy almost as tall as her. So yeah, we had an extremely
Nice,
wonderful weekend this weekend.
nice.
Yeah.
Oh, wow. What events does she do? Is she like uneven bar? Is uneven bar like I know they've got like the vault and they've got all those.
Yeah, yeah. There's like there's four things that she does. She does the vaults, the mat, uneven bars, and you know what you call it when they run and they flip on little trampoline and do their flips and land on the mat and try to stick it. Yeah, so it was fun to watch because a lot of times I'm missing it, being on the highway. So being home and being able to catch that is just wonderful.
Oh, wow, that's nice. And I bet Youssef, you were probably watching the technical indicators and all sorts of stuff, or what's going on in that world?
Yeah, my weekends are pretty uneventful actually. I'm a social recluse, so I don't do too much. But I did watch Bitcoin, crypto, and just kind of how it matured over the weekend, and it was really interesting. And we've seen a little bit more movement over the weekend that we typically see in Bitcoin. So I was having some conversations with some other traders about how we anticipated the market to kind of react when the week was to start. So it was pretty interesting over the weekend for sure.
Wow, why don't you dive into a little bit? I'm sure everyone wants to hear what's going on and things like that. I mean, I love your angle because I don't really look at the technical stuff, right? So it's one of those things. I mean, I'm still a fundamental guy,
Right.
but it's always nice to know, what the smoke signals are saying, right?
Right. Exactly. Exactly. Yeah, I'll be happy to. And we can always look at the charts, but essentially the last time we did this video, I was telling you about the sell opportunity that was coming up in Bitcoin. And I kind of shared with you where we entered the market, where we exited the market, so on and so forth. And Bitcoin, along with the rest of the crypto world, is still very bearish. It has a lot of bearish. When I say bearish, for those who are not familiar, what I'm saying is it has a lot of downside opportunity still. So, well, I have some ideas as far as how far down it could go. And again, I want to make it very clear. These are just ideas. They're not exact actionable plans. So my exact actionable plans, they come with price action confirmation and certain things happening to make sure I can enter the market safely. But I think the first time we did our live, I told you that we could see um, prices as low as 5K, prices even low as 3K. So these things, based on what we're seeing now, is very, very possible.
Wow.
Wow, that is definitely interesting.
Yeah, and I say possible. So I know people love to beat me up. They love to beat me up. So it's very possible. But as far as my actionable plans, I just posted a video to the group to show people how I actually trade. And they share some similarities, but they can be vastly different. So I just
Wow.
want people, if I could convey to people just how to see the market in more of a total wide frame view, then I would have felt accomplished in something. But for those that want a little bit more, and they say, you know what, I think I can kind of benefit a little bit more out of all these ups and downs, that would be a dream come true.
Definitely. And since you mentioned it, before we get into it, and would it be possible maybe you could maybe summarize your video, or you want to share your screen a bit, or talk a little bit
Yeah, let me
about?
pull it up and then I'll share my screen just to give you guys a quick idea. And Bitcoin is still making this video. I have to log out of some things so I don't get notifications all day. Let me log out of here. And close this, and close this. And
That'll scare a whole lot of people out of the market if it dropped to 5.
that'd be a dream. That'd be a dream. Please. Everyone needs to sell their Bitcoin. I'm on the other side, Kevin. I think like a whale, you know, so I'm on the other side.
Oh, no, we on the same side. Please believe me, we on the same side. Oh, yeah. My new strategy here, but I can't even say new strategy.
Everyone panic sell.
Okay? That's how I am. You know, the other week, last week, when we were talking.
I'm kidding. Somebody's going to take me seriously. But yeah, I'm ready now, so I could I could share my screen.
Yeah, well, why don't you go for it? Nice.
All right, so I shared in this video. So I don't use a lot of indicators and oscillators, and I've explained that already in my prior comments and videos. But one thing that I do recommend for people who are just starting out, trying to understand the market, understand the sentiment, and finding trends, is this system that is called Ichimoku Kinko Hayo. I call it Ichi because, you know, we have a personal relationship. So I call it Ichi. And really what it is a trend indicator. It helps you identify trends. And that's what it's best served for. So it's not best served for like entering the market at the best price or exiting the market at exactly the best price, but it typically will get you anywhere from 60 to 80% of the move. And as a trader, we learn quickly you can't have everything. You have to get what you can get, and you have to give the market a little bit of room. It's kind of like an offering. I can't get 100% of the move, but maybe I can get 80% of it or 70% of it. If I could do that in a high probability way, I could be immensely profitable. So, and I'm all about returns, and I had these conversations with people all the time. I catch a lot of what we call pips in the market, and in layman's terms, I just catch a lot of movement in the market. But that doesn't make me proud. What makes me proud is the type of returns I can bring in. And those two conversations or ideologies are related, but again, share some very different opposing views. So getting into this, I want to show you guys like just the hourly chart on Bitcoin, because it's really easy on the hourly chart, or clear rather on the hourly chart. And so just taking this at the very, very basic forms, basically what Ichimoku is a rule that says whenever price is inside of this cloud, and there's this, again, very, very, very basic implementation I'm sharing here. There's so much more advanced methods that I could get into, but for this purpose, just the basic. But keeping that in mind, when price is inside of the cloud, it's called a no trade zone. When price is above the cloud, you buy. When price is below the cloud, you sell. This blue and this red is the cloud. There's a reason why it's blue. There's a reason why it's red. When it's red or pink, you know, men, we don't really see pink, red, fuchsia. We just know like 5 colors. So if you want to, I'm calling this blue and I'm calling this red. But like when it's above the cloud, that means it's buying. It's on an upward trend. When it's below the cloud, that means it's selling. It's on a downward trend. And if you look at it, Bitcoin went to the top of this cloud and it dropped down. So as a cloud trader, a person that applies Ichimoku successfully, even though I've seen all of this, I wasn't interested because it's still inside of the cloud. And lo and behold, price broke back down. And if we revisit this pattern over time, you can see how immensely accurate it is, how immensely profitable it is, how much it works consistently time and time again. And this drives a lot of traditional traders crazy because they subscribe to a school of thought that you can't be this successful. A lot of people say 60% is a really good percentage, and I'm not arguing that. But if I could only win 60% of my trades, I wouldn't be trading. To be me personally, I wouldn't be trading. It's not worth me getting into market knowing 40% is against me. I can't function like that. I can't live like that. People do, and they make great livings, and hats off to them. But me, I need better odds. And Ichimoku helps me increase those odds. So now that we've seen this on a micro sense, let's look at it as a macro sense and say, okay, if Ichimoku is so consistent here, the probabilities are so effective here, what would it, on the hourly time frame, let's look at it on the 12-hour time frame or the daily time frame, to get a broader idea of where we're going in this market. So keep this in mind. This isn't Yusuf. This isn't me. All I'm doing, I'm just a conductor. I'm just the orchestra. I'm just the messenger. That's all I am. So when I see things and say, hey, the market is selling, it's based on fundamentals. It's based on technicals. Well, I take the fundamentals out a little bit, but really based on technicals and really based on confluences and probabilities. So if I know we have an 80% probability of the market selling, I have no problem saying, hey, the market's selling. Because if I'm wrong, I'm 20% wrong. But I can put my money in a position that we're going to sell. So we're the hourly, right? So let's take a look at the 12-hour. I like the 12-hour a lot. And let's see what the 12-hour says. So you notice here, very important. I want you guys to pay attention to this part. Let me enlarge in this so people can see it from their computers. So we got a breakdown in price right here. I'm circling this. When the price left the cloud. We also got a bearish cross right here. So this was an indicator we were selling and selling much further and selling much further we did. I have personal friends that was entering the market right here. There's no way in the world I'm buying Bitcoin at 12K back then. There's no way in the world. It's insane. And this is a free system. It's a free tool. You can find it on pretty much any trading platform. But people don't care for the information. They rather believe a beautiful lie that Bitcoin is just going to fly up in price consistently. But it's necessary so they can transfer their wealth to people like me and other people who are informed. It's necessary. If I'm winning, someone else is losing. And that's the necessary part. But I hope through these educational series that more of us become winners and we're taking from other people that don't apply basic principles of discipline, basic principles of exercising, when to enter market, when to exit a market. The more you're informed, the better off you'll be. So I want to show you guys something. And for those that remember Bitcoin, when we went from this 20K basically up to this 17K, everyone was like, oh, Bitcoin's back. Bitcoin is back. We won't even break 10K. Bitcoin is back. So now as a cloud trader, I knew that was a fraud. I knew that was a false. The reason why, we got a bearish cross here. We never, where the red line crosses the blue line. We never had a bullish cross where this blue line crossed this red line. Even though price exited this cloud, I was waiting for this blue line to cross this red line. It never did. They never crossed. This is what we call a bull fake. This is where the market came, viciously lured more, let's just say, unsuspecting. I'm trying to be more politically correct now that I'm on camera.
So what's your other term? Fresh meat?
No, I was going to say stupid. I was going to say stupid.
Okay.
It lured some more people into the market here and took them into the abyss. And they're still holding. They were still holding here, and then they sold somewhere around here when it got too painful. Where a cloud trader, we never got back into the market here. We waited for the cross. The cross never came. We got a bearish or a selling break. From that break, with this bearish cross, we knew the market was going to more likely than not to continue to sell down. And there's specific ways I could have played this trade. I'm just giving you the broader sense. Now, let's pay attention. What's happening here? Whoa, whoa. Bitcoin broke out the cloud, and this red line is looking like it's about to cross this blue line. It hasn't yet, but when it does, there is an extreme high probability we're not only going below 7K, below 6K, but we could very well see the top of 5K, the top of like 4K, the low of 5K. Because this would be a strong bearish indicator. So I use these systems, each one of them, in confluence with my own charting, in confluence with my own ideas. And when they align, when they both match up, I rob the market. Rob it. I literally commit crimes.
That's interesting. So, I guess from my perspective, and, ultimately no system's perfect, right? So you put 3 or 4 different systems together. you know, we think we're close to a bottom, not sure if it's the exact bottom. And we're thinking there's consolidation for maybe another couple of weeks, and then things should get going. And let me tell you about this. I don't know. Have you heard of the buyers? It's called the BMI, the Bitcoin Buyers Misery Index.
I have not.
Okay, let me show you this one.
Break it down for me.
This one's pretty good. And obviously, you know, I'm not a technical guy like you, so I'm not going to be able to break it down. But essentially, there's a guy out there called Tom Lee. And Tom is the main research guy, call it strategist for FundStat or FundStrat. So they're, you know, I wouldn't say the biggest Wall Street firm, but they're a legitimate Wall Street company, you know what I mean, in terms of research and trading and all that sort of stuff. And he's one of the guys that's been going on record always saying that, hey, you know, Bitcoin is good or Bitcoin's bad. And what he has is he's created this thing called the Bitcoin Misery Index for traders. So this index is called, you know what, let me show my screen so people can kind of see. I'll pull up the, yeah, I'll pull the chart up for everyone to take a look. Okay. Let's get I think it's desktop 2 up here. Okay, so the Bitcoin Misery Index was designed as a trading tools for investors to take advantage of volatility. So it's calculated, BMI is calculated on a scale of 0 to 100, and it takes into account factors such as volatility, the number of winning trades, yada, 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 yada. Now, I'm not saying this is like, I'm not saying we go off this, I'm just saying this is another angle, and I'd be curious, maybe you can take a look at this, and we can have another conversation about what you think about that. But basically, the way this index works is when the misery index is below 27, that's when Bitcoin sees like its best next 12-month performance. And basically, yeah, as long as you're at that misery level, you know, the future returns are going to look good. And what he's saying, and I think this came out, when did this come out? This came out March 10th, so that was, you know, 2 days back. Right now, the Bitcoin misery index is at 18.8, and that's an absolute minimum. So if you look at like how he's charted the history, can you see this, or maybe I'll zoom in?
Yeah, I can see it.
Yeah. You know, you can look at here. Hold on. What's going on? That was weird. There we go. So here we have, right, misery starts back in September of 2011, good time to buy, then another good time to buy in October or December of 2012. Now it goes up, and another good time when the misery index gets going is December 14. You know, you do pretty well. Then another good time was October of 16. So it's gone up, and now he's saying, you know, misery is at an all-time high. So we'll see. You know, we'll see if this is truthful or not. But,
you know, the interesting thing is with a lot of these indicators, as far as because that misery index kind of resembles in some ways like RSI to me. The way I was looking at it is that a lot of times that information, well, not a lot of times, all of the times, that information is really just plotted on historical data. Mm-hmm. And at 27 will auto-correct. So where it may be 18.8 now, by the time we get to 5K, it'll still be 18.8, or it'll be 19 or 16, because it's a lagging indicator, so that it'll auto-correct as price moves down so that it matches the past historical performance. So I'm really curious to see how that performs over time. But even like on the first dip, the first index dip, or where it's single to buy, that was actually during the accumulation period. And I want to buy the, you know, it sounds typical, but I'd rather get in on the dip, the actual like despair where like, man, this whole thing was a scam or fraud. I don't even believe in Bitcoin. That's where I want to get in. I don't want to get in where people are starting, you know what, this is starting to make sense. Maybe we should start to accumulate. So I want to get in on that very, very bottom. And I think that bottom could be as low as 49 to 5,300 bucks.
Nice.
Wow.
So you need those people to put the FUD out there, to put the fake news out there.
I love it. I love it. Because
Well, it's already out there, guys. You know, you got the Binance hacking, the fear of the regulations,
Yes.
the
Great.
Mount Gox. What's that? 400 million.
What else? Bring it all in. Like, I want you guys to focus on pumping all the FUD so we can get on these charts. Like, whatever bad news, like you said, a Binance hack, share that on Twitter, share that on Facebook, share it all.
Well, you know, that's the problem. And this actually, it was funny. I was on a conversation with Prince EA. I don't know if you know Prince at all, but he's in crypto. Actually, did you meet him? No, you did. He missed it. But, you know, he's in crypto too, but he's actually a very successful Facebook and YouTube media person. He's got, you know, I think 4 million fans on Facebook and, you know, 6 million YouTube subscribers. I mean, you know, the guy's done pretty well for himself. And we got to talking about how Facebook itself, like in terms of how their algorithms are, like Facebook promotes fake news. Because what happens, or not fake news, Facebook promotes emotional and sensationalist topics that get people, right? You know, if I'm commenting, if you're commenting, you know what I mean? And literally, because of how Facebook is set up, what happens is you have, and I'm not calling them bad actors, but there are people that are smart people that understand how the Facebook algorithm goes.
Right.
And those people will literally just troll. You know, they'll troll, they'll create FUD, they'll come up with all sorts of sensationalist things, right? Oh my gosh, finance got hacked. Oh my gosh, you know, Mount Gox is burning down. Oh my gosh, you know, Bitcoin's gonna go, you know, like that's literally what they do. And the thing is, it's like people, regardless of if it's almost like, you know, like a police, like, you know, your classic, you know, what was it called? Those police interrogation tactics that would like try to get like, you know, like they pull you in and like the detective thinks you're guilty. So he's going to try to like tell you you're guilty. You know what I mean? And try to like provoke that reaction.
Oh, of course. You know,
and it's like, these are techniques that are known to be, I mean, those are techniques that have extracted, you know, thousands of false confessions, you know what I mean? Like
absolutely.
It's all this sort of stuff that people do. So it's like people probably, I mean, there are people specifically in terms of the media side, and this is interesting because, you know, it goes into like media against crypto. Right now on the crypto side, you know, the Facebook algorithm, you know, everyone in the crypto world, like our reach is dropping because Facebook, you know, they've gone out and said, we don't like crypto, we're against it, you know, we want to suppress it.
Absolutely.
You know, it is what it is. So now what happens is to get the crypto out there, people have to come up with new angles, right? Fraud, you know, whatever the heck it is. Like they literally just make stuff out, create controversy, and then, you know, goes back to Facebook. Controversy creates comments, comments then cascade out, people share, people get emotional, you know. Yeah, I mean, so yeah, you like that, right?
I love it. It's necessary. It's necessary. You know, but it's an opportunity for those. It's all depends how you look at it. And it's an opportunity for those that if you came into the space with the right reasons, the right intentions, and investing in things that you believe, all of this really shouldn't matter to you.
No, I agree. And if you actually go back and look at fundamentals, there have definitely been some major fundamental positive things that have gone on. You know, I don't know if you heard, Ethereum now, they just announced something new. Let me look that up. I'm going to pull that up to solve some of their, you know, Ethereum scaling issues and everything on that side. So I know you don't follow any of that sort of stuff, but, you know, yeah, basically 2 days ago, the founder of Ethereum, you know, Vitalik Buterin, he has this new, you know, plasma scaling idea or whatever that can help, you know, solve Ethereum's transaction processing problems. Now, you know, as a trader, does that help or hurt? You know, hard to say, but like fundamentally speaking, the technology continues, you know, to increase. I mean, one big thing too, it looks like, you know, the Arizona bill got passed or is like very close to getting passed. So if you go back to, the fundamentals, that means regulatory, legally speaking and stuff like that. They're saying, hey, this stuff is legitimate. That's not. Now, what you could make an argument for, and I'd be curious to get your opinion. I bet it's probably where Kevin, if you want to hop in on this. I suspect, and I guess this might be let me take that back. Suspicion might be too strong of a word. I think there is a reasonable conspiracy theory out there that certain entities can't get into the market because a regulatory framework isn't in place. So if I'm like a big mutual fund, or I'm a big hedge fund, or hedge funds are a little different, but if I'm like a pension fund or some of these, funds that are limited by their governance rules, they can't legally get in until all the regulatory framework and all those products and everything are, put in play. So there is a possible scenario where a lot of this FUD is out there to kind of prevent the market from going up.
Exactly.
Until the regulators get on, and then they're going to go kind of buy in. And then once they all buy in, then they're going to all of a sudden the news will be like, oh yeah, Bitcoin's the greatest thing in the world. And
exactly,
we're legal and everything, on that front. So
exactly. Because the big money, they tired of missing out. They done seen the growth within the last few years when they been saying it's not going to do anything, but it's actually going to hurt them.
I'm sorry, Kevin. Go ahead. I apologize. Go ahead.
No problem. Yeah, I was saying, it's because, the last few years, they've seen the effects that could happen to their companies. And they tried for years to take it out, but they see now that it's not going anywhere. And they want to come in on a low end as well. And they got big money to pay these television networks, newspaper stands, and everything else to spread all these rumors and to crash it for the most part to get people who are new, because all this is new, and mostly everybody in there is new except a few people, to get them scared to sell off. So you got Mt. Gox, 400 million in selling in Bitcoin. Are you serious? How many people got scared off of that? Then you got all these other companies and countries talking bad about it. But at the same time, you got some companies like South Korea who is now putting Bitcoin kiosks all over the country. Then you got Australia who is going to start selling Bitcoin at newsstands. And Arizona passing bills. That's why I'm telling people to hold what you have. All they're trying to do is scare you. And if you're really that scared and you want to sell your stuff, sell it to me. I'll buy it from you.
And I'm sure if you don't take it, I'm sure Yusuf will be right behind you with the big.
I want to add to that. It's like, for one, in my view, the big money never misses out. I want to be very clear about that. Never misses out. They're always winning. They're always winning. That's first and foremost. Secondly, you're going to see a continual cycle in Bitcoin until the mass adoption rates dramatically slows down. Right now, in my view, there's a lot of inside trading. There's a lot of market manipulation. And we can see this in technical spikes in the market, in my view. So what they're doing is what they're always done, is that they make a whole bunch of money, reset the clock, make a whole bunch more money, reset the clock, make a whole bunch more money. And what retail investors do, they buy high, sell low. They buy high, sell low. And this is going to continue until Bitcoin turns into an asset to where you see maybe 5 or 10% annual gains versus 100, 200, 300%. My opinion is for those that really believe in this space, who really believe in Bitcoin, and that are not traders, just buy what you believe, not financial advice, and hold your crypto. Just hold it. Don't even look at it. Check it in 10 years and see where you stand. You can buy in more every month like how you do, Charles, or buy in every quarter, or buy in a little bit more every year, and buy at the best prices that you could possibly find at that time. But we're going to see these cycles continue for some time until we start to see the whole crypto market come in with new regulation and new stability. Like this isn't new stuff. It's like we just gave the institutional world a unregulated toy to create wealth. Like what? what are we talking about here right now? You telling me like these guys are smart? They're not stupid people.
Oh, no. I mean, smart is even understatement. These people are like, PhD rocket scientists.
They're like, you telling me that this is a layup for these guys. They're like, you're telling me, you're giving me this toy that attracts the dumbest people in the world and incites them to invest money they can't afford to lose? Are you serious right now? They're going to drive it to whatever price they want to drive it to. They drove it at $1,800. I would not be surprised. I wouldn't be surprised, and I wouldn't care either. Like, we have to understand what room we're in. Like, a lot of guys, they just like, they really think the people are in control of crypto. Good luck with that. Good luck thinking that. Good luck thinking that. Good luck.
Yeah, wow. Now, on a more positive note, fundamentally speaking, this stuff is really starting to gain mainstream. I spent the weekend out in Denver, and this is something you might want to look at, Yusuf. I don't know if this is we found an interesting arbitrage opportunity, and you might actually qualify for this. So are you familiar with Salt Lending at all, or have you heard of them before?
I have.
So Salt has a program right now where they're allowing leverage against your Bitcoin. So what that means is if you've got some Bitcoin and you need cash, instead of selling your Bitcoin for cash, you can borrow against the Bitcoin.
Sure.
Now, the purpose of that is the concept is, hey, if you sell your Bitcoin for cash now, you're going to lose out, on any gains that might happen. And, even though there are short-term ups and downs and stuff like that, when you look at the long scale, whether it's a year out or 3 years out, Bitcoin still goes up. And there's a good probability that I believe that Bitcoin can get to 50 grand a Bitcoin or even higher. Some people are saying $1 million of Bitcoin. I don't know if I'm going to go that far out, but 50 to 100 grand of Bitcoin is a pretty reasonable assumption for me, sometime over the next year or two on that front.
Sure.
So if you're going to believe that, but your Bitcoin is tied up and you want some cash to do whatever you need to do, ideally not spend it on stupid stuff, but to make other investments, what Salt does is they say, hey, we'll loan against your Bitcoin. We'll give you cash up to like 50 or 60% of your Bitcoin. And, you pay us interest. And the interest rates are a little higher. It's like 18 to 20%. But if you think about this, like from just a basic leverage perspective, if you're paying 20%, but your asset's still going up by, 50% a year or 100% a year or whatever on that side, that ain't a bad deal. And, you look at Bitcoin, if you got some at the dip at 6 grand, with what's going on, you're already up 50%, still for the year. So
I think Salt is going to accumulate a lot of Bitcoin that way. I like their business model. But I wouldn't recommend anybody lending their Bitcoin, because if you have to lend your Bitcoin, I understand there's circumstances people fall upon hard times, but it really puts you in a compromising position as far as really maintaining the control of that Bitcoin. So
it's yes and no. So I agree with you on that. No, I agree with you on that. So there's a trust factor where you've got to trust them on that side. But here's where it gets even better. This is where the arbitrage, comes out. Mm-hmm. Right now, because they're trying to garner, get more users on their platform, they're letting you pay the principal and the interest of the coin with their tokens. Mm-hmm. And they internally have a retail value of $27 per Salt token on their quote unquote platform or on their network. Mm-hmm. So literally you could take a loan out. So I could take a $10,000 loan against some Bitcoin, and then I got to pay back, that plus 18% over 3 years. So let's say I have to pay back 14 grand or whatever over the 3 years amortized. And I could go buy 14 grand. Or let me take it back. I can buy 14 grand in retail value of Salt tokens, where right now Salt's trading at about 350 or whatever a token, and use that to pay back the loan. So I could literally borrow 10 grand, have to pay back 14 grand, and then buy that 14 grand in payback for about $4,000. So now that's not as an exciting world as what you're doing. But like if I'm just looking at this from a PR perspective, I'm not even like, if I just had the Bitcoin there, I'm considering just not taking the cash to spend it, but just taking the cash to have it sit there and then buying some SALT tokens. And then the other thing is to make the SALT tokens work in that program, you got to go through 3 years. But if the cash is sitting there and if at any time they discontinue the program, you can pay the whole loan off in cash and not, lose anything or anything like that, right? So if you do it for 2 or 3 months, you make some money. If this program goes on for 6 months, you make some money. As long as you can have the discipline to hold on to the cash, life is good.
For people like me and you, Charles, we could do that. But just as and SALT knows 99.9% of people that embrace them, they're not going to do that. And a large portion of those people are going to default on their loans, which is the nature of the business. It doesn't question the legitimacy. I mean, we need these programs, and I think SALT's a good program amongst the programs that are out there. So I think for the people who are considering loaning against their Bitcoin, to really, consider every possible scenario, and then to really consider like, hey, I could end up losing this Bitcoin. Because for the average person looking to loan against it, those are more serious probabilities. And as far as like arbitrage, I actually have a friend named Dave. He does arbitrage kind of like for a living. He kills it. He finds little increments in the market, with Litecoin or with Ethereum. He actually does in many days probably better than I do trading, to be honest. Just arbitrage. And what kind of attracts me to that is it appears from my position to be a little bit less risk as well. And maybe he could tell me differently, but at times that we've discussed, it seemed as if he was taking less risk doing arbitrage and making a little bit more money as far as percent returns. So arbitrage in cryptos is really something that I'm starting to get more interested in, because I'm all about low risk, high rewards, however that may come.
Yeah, no, definitely. Oh, it's funny. While we were talking, a new piece of news popped up. And now you've got CNBC saying, oh my gosh, cryptocurrency scammers run off with more than $2 million after ditching their investors. Gotta love the FUD.
I love the FUD. I love the FUD. The FUD is great. It's necessary. But I mean, I think what's really important is that we continue having these discussions as far as where the market looks like technically. And this is big, great debate if Bitcoin and cryptocurrencies even qualify for a technical analysis. And I think over the course of this last few weeks, we kind of dispelled that to where, yes, it does qualify. Yes, we can look at this at an analytical way. And yes, we can take high probability positions. So, man, I can't stress enough, however it may be and however it may come for whoever it is, if you just take the time to educate yourself just a little bit on what the market may do based on what it has done, it will put a lot of this FUD, a lot of this FOMO to rest. Like, for instance, I actually moved a lot of my crypto assets during this downturn. And I did that pretty comfortably. I slept pretty good at night, where I knew people were buying in. I saw little bounces in the market, and I didn't really panic in any of those events because I stuck to what I seen as far as the technical format, the forecast. And so I'm not really stressed. I bought in at 6K again. I let some of that go towards 10K-ish. And I'll be getting back in again. It's not, and even if Bitcoin went to 11K right now, like, I'm so okay. Because in this game, it's not just about capturing gains. It's also about limiting the downside. So I play it both ways. And sometimes I might give up a little bit of return, a little bit of profit. But if it allows me to sleep at night, it allows me to have the probabilities and the odds in my favor, I'm totally okay with that.
Well, I think that's the key too. And, is even though, I'm sure people might not agree. And, I look at certain things you say and I'm like, okay, I like it. And certain things I'm like, I don't know. But regardless, you stick with your system.
Right.
And I think ultimately that's the key to investing, is that you don't let FOMO, you don't let your emotions get about, you look at this and like, hey, this is what it is. I stick with it. I'm not going to win them all. and you're okay, missing out. And you're okay, losing a bit. And, because you literally have no blood in your veins, I joke everyone, it's just ice.
All I have is ice.
You know what I mean? You just go through it. It just is what it is. And I think that's the thing that a lot of people run into is they start following a system, but then, the system says, okay, Bitcoin, today it's at $9,000, and I'm going to make a bet that it's going to drop down to $6,000, and then I'm going to go buy at $6,000. But then Bitcoin goes from $9,000 to $12,000. You're like, oh my gosh, I missed the system. And last time Bitcoin hit 20,000 when it went to 12,000 or whatever. So now I'm going to go buy. So then they go and they ignore their system, right? Because they see like some article or they see some podcast of someone and they let their emotions, that's called FOMO, right? They let their FOMO take over. Exactly. FOMO take over. Then what happens is 3 days later, some other fake news says, oh, Coinbase is getting sued. Bitcoin drops from 12,000 back down to 6,000. So now, if they'd been patient, they would have caught it. But again, they're emotional. Now they're down to 6,000. They're like, "Oh my God, Bitcoin's going down. I need to cut my losses. Take something while it's still going before it goes there." So then they sell it, and that's buy high, sell low. And then Bitcoin comes back up to 10,000, and they're like, "Oh fuck, I screwed up that time, but let me get back in this time," and then they buy back in at 10,000. And yeah, I mean,
you bring up a great point because it's not just understanding the market, but understanding when to capture your gains and when to layer in your new buy-ins. A lot of people, they might buy in at a great price, but then they hold it for too long. So a lot of people that bought Bitcoin last year at $1,000, $2,000, they should have let Bitcoin go a long time ago. And a lot of those people are still holding on to it. So if we talk about fundamentals, I think that if we do see this next push downward, those true hodlers, those people that were like Bitcoin, hooray, if they start to see 8K and 7K start cracking again, those guys are out. And
wow,
definitely. Oh, they're not going to see 6K again twice. They're not going to see it twice. When they see 6K twice, they're out. And that's what gives me fundamentally more confidence. I'm like, man, if we just see 6K again, that tough dude, that strong holder group, they're like, listen, guys, we apologize. Hey, this was a mistake. The house is on fire. That's when I'm gonna start to get really interested. Okay, now we're in business. Those strong hands gotta start shaking. And then we'll start to see the accumulation and the rise again. But I think the powers that be that's behind crypto, which I think is mainly institutional money or early large investors, I think that they're going to push the price, ease it down, and we're going to see how people respond. We won't see all you holders. We're going to see. We're really going to see you holders at work.
I want to add something to you guys. I want to add something. There's two type of people in the group, and some people are getting confused. Mm-hmm. Now, if you're trying to trade, I really highly suggest that you follow what Yusef is talking about and educate yourself on how to do it and to read the market. Now, personally, for myself, I'm not trying to trade. I tell folks all the time, this is my 401k. So I really don't care which way it's going, but I love when it falls. The reason why I get to get me some more. I have a terrific career, what I do for a living. I got about 13 years before I retire and still be in my early 50s when that happened with the pension. Nice. So I'm not doing nothing but buying my coins. So, for those that are really thinking about trading and scared because the prices drop or it might drop to 3,000, everything else like that, then if you're trying to trade, go and educate yourself. If you're a holder, do what you do. Invest your $20, $30, $40, $50, $100 a month or whatever that you have allocated to go into this crypto thing and smile and keep on going about your day.
No,
Kevin, you make a good point, and it kind of leans on what I said before. It's like you are the classic example of a person that should be in crypto. I mean, you have a great career. You're nearing retirement. You have things allocated as far as, what you're willing to invest, what you're willing to lose, and you understand and you believe in the space. And that is like top tier A1. unfortunately, a lot of people, in my opinion, they're not educated like yourself. They don't have amazing careers like yourself. They're not close to retirement. I think the average crypto investor, like under 30 or something like that. And then what else was I going to say? And they're investing money that they really can't afford to lose because they got caught in the emotional whirlwind of all the amazing gains of the prior years. So now they're starting to second guess and doubt themselves as maybe I missed the bus. And when we see all those people get on the same accord, like, yeah, we missed the bus, this isn't what it's supposed to be, that's when I think the accumulation is going to start again. Whether it's 5K, whether it's 7K, whether it's 3K, you know, when we start to see more of people breaking down in this market. So, but I mean, hats off to you, Kevin, man. Like much respect. Now, I love hearing the success and what you've done. So big congrats.
Appreciate that.
No, definitely. I'm looking for something to pull up. I was looking at the other day a chart of Microsoft. And if you look at Microsoft back in the 80s, it was, I mean, not as volatile as Bitcoin, but, you know, there were definitely some ups and downs, you know, that it went through. Hold on, let me see if I can pull this up. And it's always a good one to, you know, look at. Hold on, give me 1 second on that front. But what a lot of people don't realize, and the thing is, and this is the same if you look at like Amazon or if you look at this stuff, you know, 15, 20 years ago, you know, people buy and they want to be millionaires in 3 months. And
that's exactly what they want.
If it was that easy to become a millionaire in 3 months, we'd all be millionaires in 3 months, right? And
the problem is Bitcoin made a lot of millionaires really fast. And those stories took legs. And there's been just so much just hype behind it last year. And, you know, now we are where we are. But it's going to happen again. People are not going to come back into the market until Bitcoin's 15K. That's what's going to happen.
And that's so stupid if you think about it, right? You know, it's like now's the time to get in. Yeah. Wait for it to go up before. Hold on. So
they're waiting for 15K, and then they're going to come by. I'm telling you right now, when Bitcoin hits 15K, it's going to shoot to 30K. Mark my words. They're just waiting like, I don't know what's going on, but when that 15K barrier is broken, they're probably really waiting on 20K again. Then it's going to fly to 40K. Watch, I'm telling you.
So can you see my screen okay? This is Microsoft, right? And if you look at Microsoft from 1986 to 2000, Microsoft had a massive run. So basically, if you put $1,000 in Microsoft, you know, back in 86 or whatever, you know, you'll be doing okay. And if you look at this, what happens is everyone looks at Microsoft here, and you know, it was 2000, right? We look at Microsoft here, we look at Bitcoin here, thinking, hey, you know, let's buy in here. And then you get the tanks here. Oh, let me sell, you know, all this sort of stuff, right? Now, if you go back, if you look at Microsoft, I mean, in the 80s, 30% drop, 47% drop, 36% drop, 30% drop, you know, and even getting into, you know, the 90s, you know, sideways with a 22% drop, another 18% drop, another 26% drop. I mean, that's just how it is when you're in, you know, a brand new market with promising technology. And the thing is, you know, it's so easy to look at the end game and say, oh my gosh, if I just put $1,000 in there, it'd be $500,000 today, right? It's so easy to look at that. But the reality is along the way, you know, it's going up, it's going down, it's going up, and it's going down. And the people that don't have the strong hands, they would have sold out of Microsoft after the first 30% drop, or after the second 40% drop, or after the third, you know, 38% drop. So, I mean,
there are a whole lot of people like that. The guy that bought the 2 pieces for 10,000 Bitcoins, or the dude that invested in Facebook and then decided to pull out.
Yeah. So all sorts of stuff like that. So, wow. Let's probably about time to wrap up. We've been chatting now for almost a good hour or so on that. Any final words, Youssef? Any predictions? What's the chart telling you? What's the crystal ball saying?
my final words is, you know, hindsight is 2020. Like how Charles just displayed, had we known Microsoft in 1986, then we would have been investors, Apple, some of these great companies. And it's funny, this is meme that goes around online of this guy. He's like, man, I should have sold my Bitcoin at 30 cents instead of selling it at 8 cents or something like that. No, he said, I regret selling my Bitcoin at 30 cents. Now it's $8. This was like, several years ago. But it's hilarious. It's like, dude, you sold your Bitcoin for 30 cents a coin. And
Okay.
it's like, it really drives the point home. It's like, if it's something that you believe in, hold your coins. This is going to be a transition. Not financial advice. Do what you want to do. But what I'm doing is that I'm going to buy what I believe in. And if I'm a holder, I'm going to hold. If I'm a trader, I'm going to trade. So, but as of right now, I'm bearish on Bitcoin. I can see it going as low as 5K. And there's some levels we got to get to from there. And I have an actionable plan on how I plan on trading it, getting in, taking profit, getting in, taking profit. I'm not just getting in and just waiting till 5K. So there's things that we do in the interim. But for those of the crypto guys out here, if there's something you believe in and you don't understand the technicals, what I do is, or what I would do is buy what I believe and hold what I believe and allow this market to take its course.
Oh, that's good. Now, I would, so let me give you my opinions and everything. I like what you say, and that's interesting. So on my perspective, I understand that by buying and having a system like there's more money to be made, buying dips and, optimizing and things like that. No question about that. You'll do better than me, or you will perform better short and medium term than I will holding. However, I would postulate there's an opportunity cost trade that you're missing out on. And what I'm saying is the blockchain is not just about investing capital. It's also about investing mind power and career opportunities and disruptive things on that side. So it would be an interesting discussion. And, this is, ultimately we'll see what the tea leaves say 5 years from now. But, what I've done is I've said, okay, I'm holding my stuff. I understand this technical stuff goes up and down, and there's all of these sorts of great things, and that's great. But I'm building skills in the blockchain world. We're actually in the process of launching an ICO, doing all the sorts of things and stuff like that.
Very good point.
The way I look at this is, you'll make, there's no question that you'll make 30% or 60% or maybe 200% more than my investment with your trading and stuff like that. But I will have my time, and I'm going to put, and the thing is, like, you're a smart guy. I'm not saying, you know what I mean? Let's say we're both equally smart. You're making your money on the trading side. I'm going to put my money into figuring out, how can I generate new ICOs?
That's a very good point. That's a very good point.
How can I literally, so it's like, it's great to play volatility. It's better to just, generate coins out of thin air.
Man, that's a very good point, Charles. That's a very good point. I can't argue that. That's a very good point. Man, that's a very good point.
So good point. So ultimately it's all a time thing, and maybe I'll turn you into a hodler at this. But like, if you think about this, think of how smart you are. I mean, the reality is you are, from I talk to a lot of people, you're definitely on the pointy end of the stick. And whatever you apply your mind to, you will be successful. Think about that.
That's a very good point.
Why trade someone else's coin?
Working within the blockchain space, blockchain technology, where I'm just looking at it like buy, sell, which is a lot more superficial position to take. And that's a very good point. That's something that I should really put a lot more thought and consideration to. Maybe something happens in the near future, but I have to concede that. Like, that's a great point.
Yeah, because if you had started a .com company in 1997, you would have made good money trading. But if you'd started a .com company in 1997 and figured out the internet stuff, and even if you didn't become a billionaire, there were lots of millionaires made with small little websites, small little e-com companies.
Absolutely.
Got into the tech space 15 years ago, and they've got a little business. Basically, Dr. Boyce, he got in. He didn't even get in early. He got into this internet social stuff in I think 2005 or whatever, right? But he was new. Another guy, actually Al Duncan, great guy. He's a speaker, and his whole business got started primarily because he figured out as a speaker how to do this web stuff. Like, he SEO'd his stuff and everything back in 2004 when you know, everyone was picking up the phone trying to book speakers, and you know, he's done incredibly well on all that sort of stuff. So I'm just gonna put that thought in your head, and we'll see.
I appreciate that. I'm gonna definitely ponder on that. I really do appreciate that.
Well,
Yeah.
I see we have 3 different ways of looking at this, and to me they all seem good, because the way, Charles, you look at it, you know, you're able to go in your field and your specialty and produce more companies and help them get started and, you know, come up with more coins. Then you got Yusef, you take advantage of the actual trading market. And me personally, you know, and folks like myself, I look at this as the late to early 1800s and 1900s, when everybody right now is migrating to California. We are on the verge and the beginning of something terrific that is going to change, that every company is going to be a part of in some way, in some fashion. They're going to be associated with the blockchain. We are able right now to jump on board of each and every one of them companies, whether they make it or not. And for all the ones that do make it, we'll have some of and be able to take advantage of that to pass that on for future generations and our families to come.
No, that's the case. And it's not just, you know, it's not even you don't even have to go as far as starting your own blockchains. Right now, like if you're a developer and you learn how to program in, you know, Solidity or whatnot, your starting salary jumps from, like, you know, a good developer, you know, a normal developer makes like 60, 70 grand a year. Your salary jumps up to 150 grand a year. So if you think about that, I mean, what is, and, you know, I'm not saying, you know, this is just, you need to go get a job. I mean, literally, we had a guy, Mike Flott, great guy, love him to death, and hope he doesn't get hired away. But, you know, he went to our SALT conference, and, you know, 3 months ago, I mean, like, Mike's a smart guy, no question about that. But now that he started investing in this stuff, really tinkering around, he's written his own token, and he knows how to, like, talk blockchain. Everyone's asking for this kid's resume. And I mean, it's crazy. And, you know, we've got people that, like, you know, if you're a tax accountant and they've learned how to, like, talk blockchain for accounting, because there's this whole mess of, like, what are people doing with all this stuff, you know? I mean, Rebecca from our group, you know, she's launched a whole business specializing in that. And that's, like, the thing, right, on that. So there's a lot. What I love about this is there's a lot of opportunities. We're still all here early in the mix. You know what I mean? And, you know, there's money to be made, obviously, holding. There's money to be made trading. There's money to end, but there's so much money to be made, and that's what's great. At least for me, you know. That's what's exciting.
That's true.
All righty. So let's wrap up. Thanks, everyone, for tuning in. It looks like we still have about, wow, we still have some people listening to us after all this time. You know, and till later.
They came for the controversy, Charles. They knew I was going to say something crazy. Something out there. At least once a video. I'm gonna shake it up.
Yeah, we definitely need to shake. Well, you know, it'd be interesting. Maybe we should hop on later this week. You know, I don't know. You know, you've been doing. I'm sure you'll have some charting going on or something like that. Maybe we can hop on this week, because people just love this stuff, man. And I'll be honest with you, even though I'm never going to trade like you, I just love watching that stuff. It's so cool. It's so exciting for me.
Awesome. Awesome. My pleasure. Anytime.
Yeah. All righty. Sounds good. Hey,
all right, Charles. Thanks for having me. Kevin, appreciate it, bro.
And thanks, everyone, for tuning in. See you soon. Bye-bye.
Later.